Hey, everybody, there's a couple of stocks that I want to talk about today. And these are setting up for bad stuff. And I've been talking about it for a while. CrowdStrike a few weeks ago came out with this outage, and they caused all these problems with Delta and all these other software companies and banks. And I was like, that's bad. The stock got cut in half. And I said to people, I said, I think there's lawsuits coming from this. Like all these people were riding on CrowdStrike's backbone, and that stock is now down significantly. I'm going to show you in a second why I think it could continue to go down. And I'm also going to talk about another stock, but let's talk about CrowdStrike first. All right, so I'm sharing my screen on CrowdStrike, and let's take a look at this. Now you can see CrowdStrike hit about $400. It's almost a $400 stock there, and you could see that after it had its little outage, which was right in here, the stock gapped down, right? Really bad gapping down kind of stuff. And then you could see that the stock had a continuation. There's a gap down there. There's a gap down there. There's a gap down there that finally got filled. It did go up and try to fill this gap, but it didn't quite. It's hard to draw. Let's see. It's hard to make that gap there. It didn't get filled. Okay. And when a gap doesn't get filled, that means that it's probably going to go around the other side. So this stock is making what I call the dreaded H pattern. Okay. Dreaded H pattern. What that means is the stock looks to me like it wants to drop even further. Now, the stock's already been cut in half. And those of you that are out there didn't watch my other videos, the stocks can get cut in half and they can go down really far. Like I think this 170 might be in play. And it's broken through all of the other swing points. I think this 170 and the stock's at 240. That's another 70 points down. I think it could be in play. So they're going to have impacts of earnings and sales and lawsuits and all kinds of stuff. You've got to watch out when these stocks start doing this kind of action. And so you got to be careful out there. Okay, the next stock I want to talk about is SMCI. Now, if you know anything about AI, you know that SMCI provides infrastructure, computers, servers, that kind of stuff for AI. And these guys were doing great. They broke out, and you can watch my video from back in January. They broke out around 357, which was the swing point breakout right here. And the stock did nothing but almost go in quadruple, right? You could see this beautiful uptrend right here. Went up to 1229. And a lot of people said, you know what? I'm going to take a quadruple in a couple of months. And they took themselves out of the stock. And that's what all this selling has been about, right? Well, they had numbers last, I don't know, a few weeks ago. And then weird stuff started to happen. There's a gap down there. There's a gap down here because they reported that they were going to have a delay in their numbers reporting going forward for the next quarter. Well, the street doesn't like uncertainty. And so it started to sell off even more. Now, here's what's going on with this stock. First of all, we have a death cross right here. That's when the 50-day moving average crosses below the 200-day moving average. So that's happening here in the last couple of days. We have that dreaded H pattern happening right here, right? Notice that when a dreaded H pattern happens, that breakout point, and it gapped right down over the breakout point, breakdown point, I should call it. And so you can see the gap down is on volume. That's a significant amount of volume right there, right? You see that? And so when it's that means it's serious, right? And that means this stock could completely round trip. Now, the biggest sin of all is to make a bunch of money in a stock and then round trip it. I've been guilty of it. A lot of people get guilty of it because we have greed, right? We think stocks go up forever and trees grow to the sky, but it doesn't always happen. And so you can see that the stock has gone up, and now it's almost back down to its breakout point. You can see it's $389, which is only about 30 points away from 357, which is the breakout point. Now, stocks will revisit their breakout points, and I suspect it won't go below that pivot point as they shore up their accounting and all that kind of stuff. So two things. Number one, I don't like to catch the falling knife. I don't know how low this stock could go. I think 357 is certainly in play. I've been saying that for a while. And I think SMCI is in a little bit of trouble. That being said, once they get their accounting stuff together, probability say the stock is going to bounce. I don't know any of this stuff. All I can tell you is what the patterns I see on the chart. And so this stock, has a nice uptrend going, but short term, it's got a major downtrend going. Which, what's more important? Well, they're both important, but you would certainly hate to feel all this pain. So I feel for people who didn't get out when they could have gotten out. And I know a few people like that. And the stock kept going down. Some of the people that I know that I do business with, they told me that they were getting out of the stock. And so that's great. Some other people that I know that are not in my program, I'm not saying my program is perfect, but they also told me that SMCI is this great stock. And I'm like, okay, but you got to sit through all this, right? And a death cross is a tough thing to sit through because there's a lot of selling that comes with a death cross. So those are two stocks that are kind of negative. But when you get a stock that's going down like SMCI, you get another stock that's going down like CrowdStrike, you've got to pay attention because these are stocks that can whipsaw you and they can really wreak havoc on your portfolio. So I want you to be really, really careful. Cash preservation is more important than making money in the market, right? So you've got to protect the downside. Every great trader protects the downside. Every great investor protects the downside because if you don't have enough powder to live to fight another day. And I want you to be able to live to fight another day. By the way, if you like what we're doing here, give me a like, a subscribe, maybe make a comment. I love when people comment. If you give us a like, great. If you don't like what I'm doing here, you can give me a thumbs down, but just tell me what I'm doing wrong so that I can improve for other people. I want to help a lot of people understand that investing is not that hard. And so I want to show you when I see stock charts, when I see fundamentals, when I see patterns, I want to point those things out to you. I write covered calls on a lot of the things that we talk about. This is something I wouldn't write a covered call on right now because it's in a downtrend. You have to have a stock at least in a holding pattern, if not an uptrend for covered calls. This is not a stock that I would write covered calls on. It's probably not a stock that I would short at this point either until it does a couple of the things, and that's beyond the scope of what I'm talking about.